Can you keep up with the pace of market regulatory reform? MarketsReformWiki.com, the place to keep up.
How does Rapid Ratings work?
Rapid Ratings is a quantitative system for evaluating the financial health of companies and financial institutions. We look at 62 different financial measures of a company, all of which come from the income statements and their balance sheets. The system calculates these 62 ratios and then weights the importance of those ratios uniquely for each of 24 industry models that we evaluate. So our system can, on a common 0 to 100 score basis, evaluate companies irrespective of industry, irrespective of geographic location, size, and whether they are public or private. As long as we have the financial statements, we can rate them. We are not an issuer-paid ratings firm, most importantly. So we are paid by our subscribers. We have no contact with the companies that we're rating as part of the ratings process. So we're rating a bit over 8,000 public global companies now, and we rate thousands and thousands of private companies on behalf of our clients. Our clients are a range of financial institutions, from players in the futures business to alternative and traditional asset managers, lending institutions, and insurance companies. And then on the corporation side, we have a lot of clients that use us to evaluate their customer bases as well as their vendors and their supply chain. So it's a very, very broad set of customers using us in a wide variety of ways.
What has been the industry's reaction to Rapid Ratings' early warning on MF Global?
MF Global was probably the first time that we got large exposure or widespread exposure in the futures business and to the rest of the commodities world because our ratings were so early on them. And the traditional rating agencies did not give early warnings, where we gave over 2 years worth of warnings on MF Global that it was a high-risk entity. And the power of an unconflicted model and a model that is looking at the true in-depth financial status and evolution of a company really paid off in that regard, because our clients were able to get that early insight. And fortunately, it's given us a lot of exposure and new dialogue with futures players, and we've really increased our client base because of that.
Is Section 939 of Dodd-Frank necessary for standards of creditworthiness in regulations?
So for starters, the nationally recognized statistical rating organization designation, NRSRO, was codified in 2006 with the 2006 Credit Rating Agency Reform Act. The use of NRSROs has been embedded in federal regulations for quite some time, and there are currently 9 NRSROs. There were 10, one unregistered. What 939A is attempting to do is contribute to a reduction in the over-reliance on rating agencies among the investment community. So as part of Dodd-Frank, making the federal agencies eliminate references to 939A and find alternatives to it has been one of the most bipartisan, or one of the areas of Dodd-Frank with the greatest bipartisan support as an effort to reform the rating agency industry.
How does Rapid Ratings work with its clients?
We are bound only by having access to financials. So in many cases, our clients can command the disclosure of financial statements, and in some cases, we will solicit the financials on their behalf from their counterparties. But either way, as long as we have the financials for a private company, we can rate it. So in some cases, we're rating many thousands of suppliers or investments or underwriting counterparties or customers of our clients right alongside their publics. And this gets particularly interesting when looking at, say, the FCM community, when you've got some public, you've got a lot of public, but you have some private entities as well as some parents that are private. And as counterparty risk becomes more and more and more of a focus, understanding the FCM community, whether they're public or private, is going to continue to be a very important issue.
How could Rapid Ratings participate in a solution to problems associated with sovereign debt ratings?
What we're doing as an effort in sovereigns is to aggregate the corporate and financial institution bases of countries and provide reports that explains what the creditworthiness is, what the financial health is of those constituent companies, almost like a country is an investment portfolio, as opposed to becoming one of many pundits on the sovereign risk per se. And sovereign ratings have, as you've pointed out, come under a tremendous amount of fire recently, or over the last couple of years, basically because of the inconsistency with which the large rating agencies are treating ratings evaluations. Maintenance ratings, the updating of ratings that have already been issued, has always been a problem for the large traditional issuer-paid ratings firms. They get paid the most of their money when a new issue comes. They get paid a lot less on an ongoing basis. Our view is if you are going to rate something, you should be re-rating it on a consistent basis so people can rely on a systemic process as opposed to having a more haphazard update approach, which creates an awful lot of confusion and can create unnecessary volatility.
What is the future of rapid ratings?
Rapid Ratings has established itself as a consistent, unbiased third party with a fiduciary ability to be able to aggregate on a confidential basis private information, as well as to use the public filings from around the world to create a complete set of ratings on companies' portfolios, regardless of whether that portfolio is their vendors, their customers, their investments, or their trading counterparties. What we're seeing across all of our client bases is a greater emphasis than ever before on understanding who you're doing business with. And that counterparty risk management, whether it's coming from a regulator, whether it's coming from from an exchange, whether it's coming from a board and shareholders, is critical, and it will continue to be an extremely important part of how entities manage themselves. So we're very excited because we think we're playing a unique role in that, and that we'll be able to continue to do that for quite some time.